What's going on, everybody? In this how to trade video, we're going to be talking about overlapping wicks and my method of finding supply and demand zones using these overlapping wicks. Now, in this video, we're going to cover four main concepts: what to look for, what is the significance, how to draw the zone, and how to trade the zone. So I've marked out a bunch of different examples on ES for this technique, and for the most part, you should be looking for this on a 30-minute time frame. You can use this on lower and higher time frames, but for day trading, I typically recommend using this on a 30-minute time frame to find the zone. And then if you want to trade the lower time frames, you can trade them, but using that 30-minute zone. So if you want to use that zone on the 5-minute or the 1-minute, that's okay, but make sure to draw the zone on the 30-minute. Okay, with that out of the way, let's start off with what to look for. So exactly what the name says, you want to look for overlapping wicks. And what is the overlapping wick going to look like? So mainly, let's say we have a strong candle like this, right? Obviously, my drawing's a little crude, but let's say we have a strong candle, and let's say we have a long upper wick kind of like that. And let's say on the next candle, we open up right around here. Maybe it's a small doji, but then it has another strong upper wick. So when we have this kind of tweezer top, it's called a tweezer top because you have two wicks overlapping each other. It kind of looks like a pair of tweezers. So when you have this tweezer top, what the market is telling you is it likes this level for sell pressure. A lot of sellers are coming in and pushing that price lower as the buyers are trying to find higher value. So if the buyers were very strong, they would have a candle that looks like this. It would be a very strong body candle. It would have basically no lower wick and basically no upper wick. And throughout that candle, it would have pretty significant buy pressure all the way from the bottom to the top. You don't see any significant sell pressure pushing that candle back down, and you don't see any significant buy pressure on the low. It's just a very consistent candle from top to bottom. But when you see these candles with these long upper wicks, they can show signs of weakness. The buyers are looking for higher value, but they are struggling to close that candle on the high, okay? So when we see that candle struggling to close on the high, and then we see confirmation on one or more, this could be like 3 or 4 or even more overlapping wicks. When we see that confirmation with these overlapping wicks, that tells us that that's sell pressure, or if we flipped this, that buy pressure is very significant. Okay? So when we see that overlapping wick, what is the significance? We kind of covered that a little bit already, but basically what that is it's a zone that the sellers, if it's going up, the sellers are finding a lot of value, or if it's going down, the buyers are finding a lot of value. They are fighting against whatever that prevailing trend is. So if the prevailing trend is bearish, and then we start to see those overlapping wicks on the lows, let's say we have some candles kind of like this, kind of like hammer candles. If we have, obviously this is best case scenario, you're not going to see typically 3 hammer candles back to back. Let's just say we have 3 hammer candles all back to back like this. That would signify that the buyers are finding a lot of value on those lows, and they are attempting to reverse that prevailing trend. Okay. They are finding value to a much higher degree than the sellers are. If the sellers were finding significant value, that candle would look like this. They would be closing it as what we like to call a bottom heavy candle. If you guys follow my volume profile techniques, there would probably be a lot of delta or probably be a lot of volume on the low of that candle. So if the sellers find a lot of value there, then that would most likely be closing significantly towards the low of that candle without seeing that wick. So imagine this candle found a lot of buy pressure. It would look something like this, where it's the same size of the candle, but now it has a much longer bottom wick because those buyers are finding value as price is pushing lower. Okay. So yet again, like we said earlier, if we had a candle like this, and then we had maybe like a doji or something, and we had another long bottom wick, the market's kind of telling us, hey, there's a lot of value down here for the buyers, not really for the sellers. The buyers like that lower price. Okay? So let's talk about how do we draw these zones when we are seeing these overlapping wicks. Okay, so what we look for are obviously the overlapping wicks, the tweezer setup. And typically, if the prevailing trend is downward, we want to be seeing bottom wicks like this. So we want to be drawing out our zone as a buy zone, not as a sell zone. And then if the prevailing trend is to the upside, we want to be seeing those seller wicks, the wicks on the highs, not on the lows. So I wouldn't be drawing my zone like this with those bottom wicks. I would be drawing my zone on the high with the top wicks. Okay, so you want to be going against the prevailing trend. Think of it as a kind of a reversal pattern. Okay, so if we see those overlapping wicks on the low side, you want to see at least two. There can be more. Preferably, obviously, you would like to see more. It would make it stronger. But you only need at least two. So when we have that downtrend, and we start to see those wicks overlapping, we want to take our zone, starting with the body of the candle. Let me zoom in a little bit more for you. We want to start our zone from the body of the candle. So in this case, the body would be the open starting here and the close starting here. So you want to take it where the wick starts, right at the close, and then draw it down to where it's overlapping. Okay, so both of these candles can be found in this zone here. So we take where they both start and then where they both end. Okay, doesn't have to be exact. Know that trading is not an exact science. Just think of it as a zone. You want to be as close as possible, but it doesn't need to be exact. Now, obviously, there are numerous examples that I could be marking out. I'm not going to show every single example. I'm just going to give you guys kind of a general idea. Well, let's say if I wanted to draw out another zone, let's look at these wicks here. You see how all these wicks are overlapping? We could take the entire wick, so we could draw it like that, and that would overlap every single wick. Or we could try to be a little bit more precise and line it up where most of the wicks are overlapping. Okay? So like I said, it's not an exact science. Just try to get the general bulk of the wicks inside that zone. All right? So once we have that zone, once we've drawn out our zone, what are we going to do with that zone? How do we trade that supply or demand zone? So what we want to look for is we want to look for any kind of retest of that supply zone or that demand zone, the buy zone or the sell zone, whatever you want to call it. So let's say right here, we have our wick, our overlapping wicks on that low. Now this was a near perfect retest. Let me zoom in so you guys can see that. That was a near perfect retest. You just barely wicked that zone. It's not always going to be that perfect. Typically you'll see retest kind of like this one over here, where you go back into about 50% of the zone, 50% of the wicks. But in this case, it was a perfect retest. So typically, whenever the price is re-entering our buy zone or our sell zone, we want to take that trade and then put our stop loss below that zone if it's a buy zone, or above that zone if it's a sell zone. Okay? So we see that retest, and sometimes the retest can be happening right away. It could be the next candle, or it could be a long-winded retest where you kind of chopped out, and then came back for the retest, kind of like what we did back here. Either way, you typically want to trade the first retest. Okay. After the first retest, that liquidity can be said, or you can say that that liquidity has been used up. That buy pressure has been used up, or that sell pressure if it's a sell zone. Now, these zones can be used multiple times. You can see it sometimes happen 3, 4, 5 times in the future. Like let's say we drew our zone on this overlapping wick right here. That was used 1, 2, 3, 4, maybe even more, 5 times, right? It can happen. So typically what I say is you really want to trade the first retest. You can trade the second, third, and so on and so forth. But typically once that zone has been completely used up, once price has broken through that zone, we want to ignore that zone moving forward. Okay. So like this zone here, once that zone has been completely used up, you can see like right here, we're breaking that zone entirely. We no longer care about that zone. Think about the resting liquidity. So let's pretend there's resting liquidity, resting buy pressure in this area. Once price breaks through that zone, that resting buy pressure is now gone. Okay. All right, now that we know the general idea, let's take a look at a bunch of examples I have marked out. Okay, so this one we just covered. So we have overlapping wicks. We have a perfect retest. We could have longed that retest. Obviously, this would have had to be a perfect entry. We would have had to long right away. And then stop loss is below that zone. And then as far as targets go, you just want to use prior highs, prior value levels. Typically with targets, we talk about that in our other videos when we talk about value levels, volume profile levels, etc. If you're a price action trader, you can just be using like the high of day, low of day, VWAP. There's many things you can target. But really you want to pay attention to the entry and your risk management. So the entry is the retest of the zone. Your stop loss is below the zone, or in case of a sell, above the zone. Typically, you want to give it a little bit of room, but not a lot. Like you don't want to put your stop down here. It's all in relative terms, right? You want to give it a small amount of room just in case you bottom off that same exact wick. You don't want to get stopped out on like a triple bottom. Okay, so give it a little bit of room, but not a ton. All right. Okay, so that one, you had the retest. We're targeting prior levels. Could have been many different things. Let's just say it's the prior high there. That trade is over. All right, let's move on. Let's see some more examples. So this one, this is a very long-winded example, and this is an example of the zone being broken and how you can use it for momentum. Okay, so these zones are not always going to be reversal zones. They can also be momentum zones. So how do we use these for momentum trades? Okay, so we knew there were sellers here. There was a lot of sell pressure on this high because you had that overlapping wick structure, and then you had a new low. So price was pushing down, and we broke into new lows. So very strong sell pressure that originated from that high. If you guys remember my old techniques, I used to call this a point of origin. So this could have been a point of origin for this impulse down. So we know that if that sell pressure is broken, there's probably going to be a lot of buyers on the other side of that that zone. It could be a short squeeze or something like that. It could be stop hunting, right? Okay, so looking at this, we can see that you had a little bit of sell pressure on that first test. You can see that red candle right there. There was a little bit of sell pressure on that very first test. But look at how strong this trend is. That very first test did give you some sell pressure. It did drop about, looks like about 10 to 15 points, but it was not able to put any new lows. So that trade would have either been closed for a very small gain, or you most likely would have been stopped out around your break even. And then to flip that into a momentum trade, you can see if I zoom in here, if I zoom in here to this very strong candle here, look at that strength breaking through that zone. So when we are breaking these zones, if we have a sell zone and we are breaking bullishly, we want that candle that is breaking that zone to be a strong candle. We don't want to see very long wicks on the top, very long wicks on the bottom. We want to see a strong body candle with very little to no wicks. So when we see that candle come in, we can say this zone is now broken. And what we can do is we can flip this zone into being a buy zone. Because we knew there was demand there before from the sellers. So maybe there will be demand there for the buyers now. So you can either take that strong trade there when it breaks that zone, or if you're worried about that trade being a liquidity hunt, a stop hunt, you want to wait for it to reverse that zone. Maybe it pulls back, and then you start to find buy pressure in that zone. Then you can do the same exact trade you did on the buy side. So you want to buy that zone, stop loss below, and then target prior levels. Okay, so you can flip these zones. Once again, let's go over this one more time. It starts out as a sell zone. It starts out as an overlapping wick structure that the sellers were protecting. The sellers generated a lot of sell pressure, breaking out prior lows. So we know that that is a lot of sell pressure. They were able to break prior lows, prior structure. So we know that when that is broken, there's going to be a strong reaction. We don't know if that's going to be a stop hunt where it shoots up and then it comes back down. That's another trade, by the way. We talk about that in our liquidity sweep videos. So if we had a candle kind of like this, we have a very long top wick, and then you have kind of a inverted hammer candle. You can take that as a bearish setup because you're stop hunting the level, but you're closing very weak. Okay, we're not going to get into that in this video, but just understand that that is a trade setup as well. So for strength, we look for that very strong candle. We don't look for the wicks. We look for a very strong bodied candle with little to no wicks. Then we can take that as an aggressive entry, or we can wait for it to flip the zone like it did here. Look at that wick. You flipped the zone into a buy zone. You even had almost a wick right there as well. And then you target prior levels. Okay, let's look at some more examples. All right, here's another example here. So this one, you had 3 overlapping wicks, and then you had one of those sweeps we just talked about. So on this trade here, let's say we took this bearishly right on this wick right here. If we took that bearishly, that was either a very small gain, depending on what you were targeting, or you probably would have been stopped out. But when you got stopped out here, if you were paying very close attention to this level, let's say we were not using a set-in-stone stop loss, which I do typically recommend using set-in-stone stop losses. Let's say we weren't. Let's say you're the type of trader that doesn't like to use set-in-stone stop losses. You like to wait for confirmation to close your trades. If you are one of those traders who waits for confirmation, this is actually a bearish entry. So either you could have held on to your prior trade, or let's say you didn't have the prior trade. Let's say you either exited or you just completely missed it. This is actually a bearish trade because we have one of those stop hunt patterns that we covered earlier. We know there's sell pressure in this zone right here. And then we see a very strong push, but it wicks it. It goes back down. So that tells us that there is still sell pressure in that general area. They just got hunted. The big boys like hunting those stop losses. So yes, they hunted those stop losses, but there is still seller demand there. So that is actually a bearish entry. And then same thing. There was either a very small gain or you would have been stopped out on the pullback. Now, typically we are using this to scalp. So this is a pretty big move. We probably would have taken profit there. That is a move of about, that's about 20 points, 15 to 20 points. So that's a very good scalp. Typically, we're only looking for anywhere from 5 to 10. Now, recently, the volatility has been very high, so you have to take that into account. Possibly you're looking for more. Okay, moving on. You can see here, once again, we're flipping the zone. So you can see if we flip this into a buy zone, look at that pressure. You can see the buyers are now using that zone as buy pressure. So if you started to see this, we saw it on this 30-minute candle right here. We started seeing buy pressure. We saw that lower wick, and then we saw it close towards the high. So we're like, okay, this used to be sell pressure, and now we're closing very strong using that as buy pressure. That is a very standard support and resistance flip. A lot of traders use many different kinds of support and resistance flips. This is one of them. So we can see that resistance flipping into support. So we could have either been aggressive and taken that as an entry, or the way that I like to trade it, you wait for that confirmation, you wait for that first retest, then you can take that trade, right? You see that retest coming in here. And then right away, buy pressure comes in. Look at how strong that candle closes. Very strong bodied candle with little to no wicks. You have a bottom wick, but you have no top wick. Very strong close. So you can take that in the buy zone there. Hopefully that's where you would have entered. Or you could have taken it a little late on where that candle closed. So same thing. If you take it in the zone, stop losses below the zone, you target prior levels. Whether that be VWAP, value levels, high day, whatever you want to target. Okay? Okay, so now we use this zone bearishly. We use this zone bullishly. Typically at that point, that zone is used up. You probably want to ignore that zone moving forward unless you see a very strong reaction on that next test. Like I said, these zones can be tested 10, 20 times if they want to. It just all depends on how it's being respected on each test. So like right here, the test was very strong and it closed very strong. But moving forward, it blew right through that zone. It kind of ignored it. Okay? So once we saw this candle right here, just completely closed through that zone, it's ignored. It's no longer a demand zone. So we just delete it from our chart and we move on. Okay. Let's take a look at a few more examples and we'll call it a video. By the way, if you guys enjoyed this content, please hit that subscribe button. It does help a lot on YouTube. Thank you guys for watching this far into the video. I always forget to remind you guys in the beginning. Hit that like button, be sure to subscribe. Okay, moving on. So what I wanted to show here is it doesn't always have to be overlapping wicks. I know that's the name of the video, but it doesn't always have to be overlapping wicks. It could be just one wick if it's a very significant wick. What I mean by very significant, it's a little bit relative. You know, everything in trading is relative. So it's relative to the body of the candle. If the candle body is very small and the wick is like 3 to 4 times the size of the body, let's say the body is like 5 points, and then the wick is 20 points. Now, obviously, that's a very large example. But if the wick is like 3 to 4 times the body size, that is a very significant wick. Kind of like this candle right here. When you have those single wicks that are extremely significant, you don't want to draw your zone where it overlaps with the next wick if it's a small wick. So you see right here, this wick is very small. We don't want to make our zone tiny because that's where that wick is overlapping. We want to pay attention to the larger wick, the very significant wick. Okay. And typically with these very large wicks, they are retested eventually. So if it wasn't retested right away, let's say we have a very long, let's say we have a candle like this, very small body, long top wick. Let's say right away we retest it. We can use that as a sell and we could look for a downward move. But if it's not immediately retested, let's say it got bearish right away. And then after a lot of chop, it was then retested. You can still use that single wick as a demand zone. And we can look to sell that pullback. Okay? So we can use single wicks if they are very significant compared to their body size. And then as we see here, retest, retest. And this one shows you that you don't want your stop loss to be super tight, because if your stop loss was very tight, you would have gotten stopped out there. And then look at what move you would have missed. You would have missed a massive move down. That's obviously if you were swing trading that. If you were scalping that, unfortunately, it was at the end of the day. Okay, let's look at a few more examples. If you guys have any questions, by the way, feel free to put them in the comments. Here is another example of using it as a flip zone. So it started out bearish. You started out as a sell zone, and you had a very strong reaction. You can see that candle right there. Beautiful bearish reaction off of that zone. So we would have started drawing it after this candle, right? This green candle right here, this green candle, because that was the overlapping wick candle. So you started out with the wick right there, and then you overlapped with that green candle there. So you could have traded that red candle because you were already prepared for that sell pressure. And it gave you a new low. Okay? But then you started to break through that zone. You started to ignore it. And then look at that flip. The sellers were ignoring it. The buyers were not ignoring it. The buyers completely used that zone as a buy zone for the span of like 2 days. And then once that zone was completely broken right here, we can ignore that zone. Once you have a very strong bodied candle just blowing through that zone and ignoring it, you can usually delete it. Okay, we're going to quickly go through these examples because you guys get the gist at this point. Very strong wick, beautiful retest. Stop loss below, looking for prior levels. Okay. Same thing here, strong wick. This one is a little bit of a new example because the wick is not longer than the body, but it's one of those very significant candles that closes very strong bearishly. We call these bottom heavy candles. So let's pretend like we had a lot of volume on the low here, and then the volume on the high was pretty weak. The buyers were very weak. So if you close this candle very bottom heavy, it's okay that the wick and the body are about the same size because the volume is very bearish. So typically with candles like that, they are known as bottom heavy candles, closing very bearishly, and you can use that wick as a seller demand zone. Okay? So moving forward, look at that. Seller demand, here, and then it even flipped it. Okay? Another zone here, we have overlapping wicks. There's the retest. This one was a little bit weak, didn't really give you that new high. And then same thing on this zone. Look at this right here. Very strong break. So then you have that momentum move away from the zone. And they flip it bearishly. It's only flipped bearishly for one candle because it's the close of the day. But look at how strong that candle is. So that was more than enough for a scalp. So it was bullish, but then you had a very strong break of that bullish demand, flipped into bearish demand. There's the momentum. By the way, like I said, I like using this on the 30-minute chart, but if you're looking for those very small scalps, you can draw the zone on the 30-minute and then go down to the lower time frames to look for those exact entries and exits. Okay. So I'll show you an example of that right here. So let's say that zone is at 11 o'clock. We go down to the 5-minute. And then look at the 5-minute here. So here, actually, let me show you exactly where that zone would have been created. So that zone would have been created basically on this candle right here because it started to overlap already. So these candles were all overlapping. This example is breaking our rules a little bit. Typically, you do not want to look for buy zones on the high like this. We want to be looking for sell zones. The reason I had this one drawn out, I believe we talked about this on stream, is it kind of had that bull flag pattern where you had a very strong move up and they started to find buy pressure and kind of where that buy zone would be on a bull flag. So that was the one exception here. But okay, let's say that zone was created on that 11 o'clock pullback. So if we go down to the 5-minute, we can see that 11 o'clock pullback right here. This would have created that zone. So then on this pullback, and this pullback, we could have traded that bullishly. And notice how every single one of those pullbacks does not break the low of that zone. So even if you had an extremely tight stop loss, you would have been fine. Okay? That is how you can use it, by drawing it on the 30-minute and then looking at it on the lower time frames. And that zone is actually still in effect. But all right, guys, that is how I use overlapping wicks to find supply and demand zones. Hopefully you guys enjoyed this video. If you did, hit that like button. Be sure to subscribe, and I'll see you guys in the next one. Peace.